Good morning. It's Wednesday, March the 5th, 2025. Hi, I'm Zach Howard, and here is your 3-minute morning market update. Four things I want to talk about today. In my notebook, we have currencies, commodities, Trump's State of the Union address in the U.S. last night, Asia, more specifically China. FX, Euro continues to strengthen here, 107 combined with a strength in the Japanese yen is really putting a weaker DXY on the board. US dollar down to 105. Oftentimes, weaker US dollar sets up for a shorter term bid into risk assets, as we probably could get a bounce here today in US equities after continuous down days last week. Also aiding a potential bid here into the higher beta asset class of Bitcoin and digital assets. Big bounce there overnight as rumors swirl that a capital gains exemption is coming for that space the latter part of this week in the US. Commodities. Mixed picture in the commodity basket. We got WTI oil sporting a Mario Lemieux handle here in the backdrop of slowing growth, kind of pricing in a severe global growth recession slowdown if you look through the lens of oil. However, you look through Dr. Copper here, a big 5% bounce here on a Wednesday. So mixed messages in the commodity space. On to the U.S. Trump's State of the Union last night. It was entertaining TV, if nothing else, but there's a few tidbits there to take away as it relates to markets. First up, what I took away was this potential tax deductible legislation on US-made cars. You combine that with a 25% tariff on Canadian-made vehicles, it really sets up for severe challenges ahead for the Ontario auto sector and Canada as a whole. Really, the only relief valve is going to be more stimulus from the Bank of Canada and the federal government here in the coming weeks, if that is actual fact. Further to the speech last night, continued to see the Trump administration beat the drum here on lower yields in the U.S. That seems to be the priority right now, not a higher stock market. Getting those yields down, which is kind of echoed through the lens further of Scott Bessent, the Treasury Secretary, over the last few weeks in meeting interviews. An odd day yesterday when it comes to U.S. markets, as we've seen the U.S. dollar, U.S. equity markets, and U.S. Treasuries all down on the day simultaneously. That's a pretty rare occurrence. It potentially shows a signal to the world that capital is starting to leave the U.S. from its rate of change as it's been going in there, potentially making up for some more challenges ahead for those Mag 7 stocks, which leads us to Asia. And a big rally overnight, specifically in China, after the Chinese Communist Party come away with its plan for its centrally planned economy here the next 12 months. They are forecasting 5% growth for 2025, but surprisingly, they are going to have a deficit budget of 4% of GDP. That's massive for an economy of their size. They're really taking the baton from the former Biden administration in this fiat debasement race here to stimulate the economy with the money printer. You can see that through the lens when you look at the Chinese 30-year bond yield at 1.9%. Who in their right mind would loan the Chinese government money for 30 years at 1.9% when they are telling you inflation is going to be at least 2% and their growth goals is 5%? Return-free risk. No wonder Chinese citizens and the government itself continue to line up to be mega buyers of physical gold. And that's what I got for you today. Have a great day and see you tomorrow.